Hello, everyone, and welcome to today's No FOMO Charts, Stocks, and Crypto TA Livestream. Today is Saturday, January 2024. It's just about 8 o'clock p.m. Eastern Standard Time. Welcome, everybody. In this live stream, I review stock charts and crypto charts, as well as what's happening here in the USA for the upcoming week. If you have a question, just let me know in the comments or the live chat as we're getting started right now. If you have a stock chart or a crypto ticker symbol request, just go ahead and let me know. All right, so this upcoming week is a big week for tech and finance earnings. We have major companies: United Airlines, Netflix, 3M, GE, Johnson & Johnson, Texas Instruments, Verizon, Tesla, Abbott Labs, IBM, Intel, Alaska Airlines, Capital One, McCormick, T-Mobile, Visa, American Express credit cards, Colgate, and more. There's a lot more. Economic data, we have manufacturing index, services PMI. Advanced GDP is very important in regards to inflation and the FOMC decision on interest rate cuts. Core PCE price index on Friday as well. Unemployment claims, durable goods, and new home sales as well. In terms of news, it's very simple. We have USA stock market earnings season is continuing this week, the big global brands and tech companies as well. For crypto, there was that news that a USA federal judge questioned Coinbase and SEC on whether digital assets are securities or not. So there is some indecision. Vanguard company as well they said they're basically not going to do a Bitcoin ETF, whereas the other companies, they want to do Ethereum ETF, XRP ETF, leverage ETF, and inverse ETFs. That makes sense to me. Okay, let's go ahead and go to SPY. We're in stocks right now. So the first question people might be asking for stocks is, why did we go up and not down? So if there's no negative catalyst that happens in the market for 1 or 2 weeks, it's probably not going to go down. We saw some of that data. So we saw retail sales data that was up above expectations, meaning people in America are spending more money on retail sales in the past month. And consumer sentiment was something like 12%, 13% higher. So those two data metrics could make sense why for this particular 3 days, Wednesday, Thursday, Friday, we reversed to the upside. Also, we had a Morningstar price pattern on the S&P 500. Morningstar. This is a bullish sign, breaking above resistance. Now, the question is will we pull back even just for a little bit? Maybe one small pullback even in intraday before we blast off higher. It really depends on earnings as well this week. So on the weekly, this is a bullish continuation. We had an evening star, which was supposed to be bearish, but people are thinking about bull market and interest rate cuts, and people outside are a little bit happier. They're a little bit happier. Just my observation. Maybe because it's the start of 2024, but we're not getting any crazy amount of bearish data. So we're in this very tight rising wedge pattern. The target above is 47.14. We could put the pivots up as well, and you can see a secret pivot here at 493. Also, sometimes if you want to bring up a Bollinger Band, you can do that and see we're piercing above that Bollinger Band. We're still in the up cross with the moving averages. So we just had basically a 26 or 20 SMA EMA bounce break above resistance. That's what's going on with the S&P 500. QQQ as well. Didn't quite touch this. So last week I drew the potential bearish scenario just in case that happened. But if we keep up with the price here, draw these trend lines. You can see there's a trend line on the dotted area, the dotted line. And we are simply riding that trend line in this upward rising channel. High, low, high, low. This was a lower high. So there was that bearish risk. And that's why I was telling people maybe it could pull back down. But then once we had the hammer candle on support, that idea of going bear, it flipped, right? It's not coming true because if we have support and we have a support bounce, we're going straight up to the top of this channel, 425. So it's never a good idea to get extremely biased in one direction because the data, the sentiment can change in a matter of 2 or 3 days in the market. Weekly, I'm not seeing any super bearish sell-off signals or anything like that. Maybe the only risk is it's starting to approach the overbought area, but we're probably going to rally into that if tech earnings are good. Dow Jones as well. Dow Jones had a little bit more of a pullback here on the price. We did break above that resistance just above just above 377. We did manage to bounce above the 372 area. You can see we almost had that head and shoulders, but the bulls are saying, no, the data is too good right now. We're probably going to get interest rate cuts in about 6 months from now, estimated. So we had a strong uptrend consolidation, and it's either going to go up or it's either going to go down. I doubt it's going to consolidate for a long period of time because the market has to make its move. If you're an intraday trader, hourly got oversold. Hourly got oversold somewhere in the January 16 area, and intraday is always good just to check your support levels. We hit that support level, double bottomed on the price, and this is why we rallied back up. So sometimes it's worth it if you really want to know and get inside of the market to check a 4-hour chart or a 1-hour chart for any potential price patterns, regardless of what the oscillators say. Last one here for the indexes, Russell 2000. IWM, I still like, for all of these charts, IWM, we're still golden cross. Dow Jones, we're still way golden cross. We're way at the resistance area. NASDAQ as well, S&P 500 as well. So IWM with the clear golden cross and 50 EMA bounce. So in terms of ABC correction, there is that small pattern completed, ABC, and see if it's going to bounce up and rally higher. Where can it go? Possibly to 195, 197 as well, and 200. So we're going to see exactly where that range is. On the weekly, we do have a nice weekly hammer candle. So we're going to see, are we going to get some green in the next coming weeks on these small caps? US oil. US oil. Still with the upside down head and shoulders, bearish death cross, and tightening up in the sim triangle right here on the right side of this shoulder. We did have that breakout. If this is true, let's just measure this. Should be able to go 5% if it wants to go bull. Could end up at around $72. But it's watching this EMA on the yellow side very closely to see if it's going to pull back or not. On the weekly, very messy chart, but then we did have that double bottom at the beginning of January. See if that's going to hold or not. UNG, this is what I'm saying. When it gets too high here, we had that double top on the RSI, and I knew not to long that. Not to long it. This was a potential maybe rally, and it came true. Went a little bit parabolic, short squeezed out of there. Went from oversold to overbought. If somebody's a swing trader, just get out of there. Just get out of there. Once we started losing the price, we had that gap down on Friday, January 12th. Something to watch out for. So sometimes if somebody's not early enough in the trade, have to get out of there. For the future setup, potentially we might have a double bottom on the weekly. So that needs to drop back down to about 460, 470 area before we can get another leg up. This could also be a higher low. This happened before where it went up a lot, came down, established a higher low, and then we'll try to double top again at 670. So those are the two levels I'm looking at, 470 and 670 on UNG. Let's go to gold, GLD. Gold here consolidating a little bit to the side. Let's refresh this chart. First off, draw a trend line. Zoom out a lot. Let's get at least a couple years of data here. Now you can see why we're stuck up here because we have a resistance zone. 195 to about 190. 190 to 195. This is where we are stopping. Set the trend line below just to hit as many points as possible, probably somewhere here. You can see why we bounced off that. It does look like a large weekly ascending triangle, however. You can see this triangle maybe setting up. So either we're going to break out on gold or it's going to pull back to about the 180 area and probably tighten up and then try to break bull. However, if the market blasts off and rallies, this could definitely pull back. So just watching out for that 180 area. If it's going to break above 193, that would be interesting. All assets up type of situation. Silver, this trade is over. Didn't quite hit the 6% target. Actually, it did on that one day. And then so that's a swing trade that's over. Now, zooming back out on the daily here, you can see hit that resistance zone, just tightening up above the $23 area. Symmetrical triangle formation on the daily tightening. So what it needs to do is silver needs to hold the support above $20. That's what it needs to do. Try to maintain the higher high here at $23. May see anything on the weekly. Just a little bit of support. There is no hammer candle, however, so just need to watch out for that. Okay, so we do have some big tech stocks coming up. Let's look at the sector ETFs very quickly just to get a feel for what's going on in the market. So XLK with the massive rally to the upside. Beautiful. Now, is it all-time high? Yes, it is. So 2023 was just 1 year ago, was such a beautiful spot. This is that higher low that a lot of investors, if anybody got in here, it was just incredible, right? It's just all gains. There was that little scare right here in the end of last year, but then we rallied above that. XLC as well, very similar charts. A resistance. It's piercing its resistance here on XLRE. XLRE did get shorted down in the sell-off, you could see, as according to last week. So that setup came true. Now it's at that support level. See if it's going to bounce up or not. XL Energy, unfortunately, the upside down head and shoulders for bullish continuation was not true. And we have the lower high and the lower low. See how low that can go before you get a little bit of a bounce for that next lower high. In terms of XLY, double bottom here, but it's not looking the strongest. So I know some people are excited about this. We have a rally, but it needs to strongly rally out of here. Okay, if it just pulls back a little bit, there's still lower high risk, and then it could dump as well. It really depends on the news, but we're not seeing super bearish data at this time. A lot of these pulling back a little bit, healthy. It's about half-half. Utilities got shorted down, so did real estate. But you can see that tech and AI is just really blasting up this for the past 6 months. Very interesting to see. In terms of the big stocks coming out this week, so we have Netflix. Netflix tracking very well. It's been in, remember this May 2022 rally? I mean, that was really stressful for Netflix, but they survived. However, they're still under that resistance. Used to be former support, which is now resistance. And until we get back into that channel, it's not a confirmed uptrend yet. It's right literally at a resistance point, 494. It's at double resistance here at the blue line. I will leave that there for next time, right before 3 days before earnings, 3 calendar days. So how far, let's see, how far did this retrace? Looks like it retraced back to 382. Yes, 382. Fibonacci in the light yellow here. I mean, it retraced all the way back down, all the way down here, and hit the 618, hit the 50%, back to 618, up to 382. So the next level would be 570, probably 600 and 710. But that's if they have good earnings, right? It's going to be a question about subscriber counts and new content. And especially, did the password sharing crackdown, did they fix that completely or not? Etc. They're going to introduce a new ad tier, future entertainment services as well. So we'll see what happens there. Tesla. Tesla is still at risk because on the charts, it's been stuck under this resistance for almost 1.5 years. So the fact that it's a triple top, it's slanted, it's horizontal right here, this blue line, that's not really good for Tesla. What they need is they need some like blowout earnings in terms of surprise. Like, wow, they really sold a lot in sales and revenue. The EPS is good. New products or new service or new updates or new quality control or just some really, really positive news that's going to save Tesla. If not, you can see there's quite a bit of open space down here below $200. So $200 is that final line in the sand that if it drops below there, we're probably going to see some short selling and some panic selling, capitulation on Tesla, something we want to avoid. Let's look at Visa as well. Visa just incredible, right? Let's look at Visa. Let's look at MasterCard. Let's look at Capital One, American Express. Very similar. Capital One and AXP, American Express are more correlated, probably big hedge funds or something, institutions selling that off. But Visa in a very strong uptrend for a whole year. So sometimes, just for stock ideas, sometimes the safer play, so to speak, is the play, right? If somebody wasn't sure about tech or AI or Netflix or Tesla, but if I think about what are people using credit cards, the four I just showed you in America, Visa, MasterCard, American Express, Capital One, people are using that. So as long as these companies are holding up, these were the safer plays, but now it's breaking out so high here. Is it a pivot? Cannot read that. Is it a pivot? Let's see. R3 is our next pivot, 276. Is it Golden Cross? Of course, yes. We had a double bottom here at October 2023. So these are perfect setups right here. Here's a little education, little advice, knowledge right here. Even if I didn't draw anything, and I'm looking at a Visa chart just like this, look at a couple years of data, or at least the last high, which was in 2021. Where do I want to buy Visa? If I was looking at this chart, 2 years of data, 3 years, is point A is a resistance, point B is support, point C resistance, point D, and maybe let's say the last one is E, right? Where am I going to long this on the chart? Let's say I'm investing. So let's say I have like a 20% stop loss up here. 20% stop, excuse me, 20% target, 10% stop loss. So I have a 2-to-1 reward to risk ratio, 20% up, 10% down. And do I want to buy at point A, right exactly at A? No, that would have stopped out. B, yes, I do want to long because there's 1, 2, 3, 4 entries and it made a quadruple bottom. That's a bullish setup. Do I want to buy at C? No, because that was a resistance point. That's a top, triple top. That's a bearish setup, double top, bearish setup. I want to sell that or not buy. And then when it double bottoms here on the price, ooh, yes, I like that. 2-to-1 risk. And then when we have another one up here, this one is yellow light for me because it's not really, this could have turned into a lower high and went down, but the rest of the market rallied. And we've been in such a strong uptrend. This is what they call buy the dip. This is a perfect buy the dip example. Same with D here, buy the dip or oversold conditions. If you use oscillator, that's oversold. This one is oversold as well with MACD continuation. So E is a perfect example of buy the dip. That's when the entire market rallied October. So if we think about it right now, let's say after earnings, if earnings are bad, am I going to buy this? No, I'm not. I'm going to short this thing down if earnings are bad. If earnings are good, if I can catch it at a close enough good price, maybe. But the safer space and spot to have bought this is after earnings here, which were not that bad. Not that bad, right? At least top line EPS and revenue was good, and that's why we rallied as well. If this was bad earnings, this would have not probably tracked that high. Just some food for thought there. Let's look at the last one, Intel chips. If you know your CPU chips, Intel is one of the big makers. So we had a beautiful triple bottom at 2023 into a nice breakout rally. but we rallied so high and we did double top last month. It did refresh a little bit, the oscillator, but it's sort of looking a little bit parabolic as well. Starting to go parabolic here. So once we lose this parabolic support, it might not be the end, because on a lot of stocks, especially in the tech sector, some of the oversold ones, I'm seeing almost a potential rounding bottom or a potential cup and handle play that if the earnings are bad, it might not be over completely, because if earnings are bad, price comes down, price keeps coming down a little bit more, maybe not this much. But once we start getting rate cuts this year, maybe 6 months from now, sometime this year, right? Maybe that's the exact final buying spot before we have a mega rally. That's why I'm not giving up on Intel or AMD. Or, for example, like Coinbase, you can see it on the charts. There was that huge upside down and shoulders, but if you zoom out on a weekly, if this pulls back, this could be some kind of dirty cup and handle play. There was already one here, but maybe we're going to get a second one, right? High, low, high, higher, low, and then blast off higher if crypto recovers, right? What I'm also seeing on Robinhood, look at this parallel channel going sideways, right? A lot of people not liking Robinhood so much, but what I'm seeing is I like these type of basing plays, right? If it's just downtrending, that's not really good at all for long. That's just sell, 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 get out of there. But then when it goes sideways, there's potential for this thing to blast off on the weekly chart. It could take like a year, but maybe 60%. It's $21. This is assuming that nothing bad happens to Robinhood legally, right? It's okay. If this thing pulls back down, that's okay. We at the support level. If it hits the halfway mark and rallies back up to 13, I'm just waiting for that. It's rejected down 3 times. So see if that happens. Also, take a look at PayPal as well. We have PayPal USD crypto, and hoping that doesn't get like sued by the SEC, but it's this falling channel type of pattern, falling wedge channel. And this could be an upside down head and shoulders getting ready to break out before earnings. So when's their earnings? It's in February 7th, but still, I like this upside down head and shoulders right here. And we just poked out above that. So if this is going to go up, maybe potentially 10 to 20%, 20% target, $76. I like PayPal. That's what I'm looking at. It's not 100%, but the perfect spot to have bought was just oversold back here in October, but that's every single stock. But just like Visa, will we have a double bottom continuation on PayPal? That's what I like to see. All right, that's just a couple things I've been looking at here. Let's go to crypto. Welcome, everybody, to the cryptocurrency section of my live stream. It is January 20th, and we are having major pullbacks in crypto. You might be wondering, why? Why is this happening in crypto? I thought Bitcoin ETF was supposed to take us to the moon. Well, remember that Bitcoin ETF approvals are 1 to 10 years in the making. That project is finished. So I like to make the analogy of Bitcoin ETFs are like cars. Once a car is built and finished in production, it goes out to the market to be sold. Once a house is completed, constructed, all the permits are good, it gets sold. So we're going to have that initial sell-off because we're so high in the price right now. If the ETFs came out down here, we would probably see green because it's oversold conditions, basically. But if we have ETFs coming up here, and not everyone's going to buy that, and it's a high spot, we're having that sell-off right now in altcoins. So we did have that oversold back here in August 2023. The ascending triangle is still in play in TOTAL. 62% was the target. Supposed to hit that 2 trillion area. Now on the weekly as well, you can see the pattern. High, low. High, where's the next low? We can fall back all the way down to 1.4 or 1.2 trillion. We have 4 weeks of dojis and shooting stars. That is not good in the short term. Short term, it's not good. What does that signify? What is that signaling? selling, indecision, literally went sideways. That is not pretty, or that is not good to see for the bulls. Losing volume, although somebody did buy big green last week, probably on the ETFs 2 weeks ago, but not enough to save the market. So we're probably going to get a pullback, and that's okay, except embrace the volatility. It's going to happen. If I'm an investor, I understand. Crypto is volatile. You have plus or minus 20%, 50% swings. That's crypto. Happens. So this ascending triangle is still in play. It's going to take maybe 6 months, 1 year to fulfill itself. The only problem is we did it at that 618 level. But remember, just like some other stocks I just showed before, it could pull back all the way down to 786, and then we try to rally back up to 50% or 382, just like Netflix, but it takes time. It takes time, and we need to make sure that all these companies are good. They're working on their projects for real, on the updates, cryptocurrencies. The SEC and the government they should not really keep suing crypto at this point. We're going to monitor how the Bitcoin ETF is going to do in the market. That's what we're looking at here on total. It's still in the golden cross. That's why I'm not saying crypto's in a downtrend right now. I would confirm that once we start making lower lows. Hourly, 15-minute, we're still in a downtrend if you just look at this one blue circle. But in terms of the daily, we've had downtrends before with oversold continuation. So if that happens for the fourth time, we're probably going to rally in April if that happens. All right, so let's take a look at Bitcoin dominance, BTCD. Now I like this, right? Remember my analysis from 2 weeks ago where I said, let's watch out for this play, and that's exactly what happened on crypto. Now, what's the next play? Potential double bottom, right? Even if it's going to be a lower high, it might not blast off all the way, but lower high. If this is truly our lower low, then we should see the Bitcoin dominance right here. And sometimes it doesn't make sense, but the chart, it should go up. Okay, hopefully. But the fact that it's below this 200 EMA, it could also just crash. Because why? Because the Bitcoin price is like this, high. So Bitcoin dominance and Bitcoin coming down, this could actually make a lower low. Just watch out for that. If this is not a true double bottom because it's already below that. But if it happens to crash, it's not impossible for that to happen. Now, let's look at Bitcoin futures. Something that I don't really show on this stream all the time. But why I like futures is you get gaps. Secret gaps. Free indicator by TradingView. You can see we're stuck at the first gap of $40,000 in the yellow right there. Second gap is 35. Next big support 30, basically. And there's probably 37 in here as well. But if we draw this, let's just look at the Fibonacci from past 6 months, low to high. Right there. Where's the 50%? The 36K, 34K. So those are always levels of value if somebody knows their Fibonacci. The parabola got violated. This thing just broke to the downside for about a week. So in the short term, we could hold 40,000. That's our line in the sand. We need to just not drop below there. But if it happens to drop below there, there's a case to be made here that we reject down to 37,000 in the short term. So even on weekly futures, you can see we have that resistance. That's what I was talking about last time. So if we go Doji shooting star, now we actually go to Bitcoin to finish off the Bitcoin analysis. Weekly double top. Right here, right below 45. It's our line in the sand. So where does it kind of look like it wants to go? It wants to go down. Bitcoin. It's too overvalued, 37 or 32K, probably. And we see that big open space in the blue right here. All right, last thing, BLX for the super long-term analysis. BLX. Just remember, folks, everybody who's in the long-term mindset, which includes myself. First halvening, crypto went up. Second halvening, crypto went up. Third halvening, crypto went up. Fourth halvening is where we're going to test that in 3 months from now. But it's not 100%. It's 0 up to 75% chance in the past. And it's pending on government and SEC and these big institutions. But remember, how long does it take to really rally? Basically 1 year after the halvening date, 1 to 1.5 years. Basically an average of one year, 1.2 years. So as an investor, I have to wait a long time. I have to wait 1.5 years maybe. And that's assuming that the government doesn't ban Bitcoin trading or investing products here in America. It's going to be a long wait. But what it sort of looks like to me on the charts, this most recent price action of 2022, it's kind of hard to see. I'll put it in a line chart. It reminds me of 2015-16. Doesn't it look very similar? Very slow rally before a takeoff. So I have to imagine this part on the right side is probably that might happen if Bitcoin and crypto survive for another 2 years. Could be that. Could be the one, right? So that's why I'm maintaining that long-term perspective, even though it's in the overbought area. But remember, in 2016, we had this massive choppiness here, massive pullbacks, and then rallies. So short term, we could get pullbacks. Medium term, swing traders, we could get pullbacks. Long term, though, this needs to establish the higher low. And for the monthly as well, you need to establish a higher low to blast out of here. Okay, Ethereum, hopefully that makes sense to people. Ethereum on the daily. Got stuck below 2645. Resistance, immediate support right at 2372. Box this in. We also have this trend line that's dotted, ramping up here. So I can probably assume it's going to go to 2400. We're still in the golden cross. Still okay. That 50 EMA, 2316, is our level in the sand right here. It's totally normal. If Ethereum suddenly crashes and drops below 2000, then I might change my mind about that. Binance Coin, at this point, looking like it's not quite flagging. It's kind of hard to draw, but it's just a sim triangle here going on. Maybe another upside down in shoulders, but once it's at a rally, I don't count that as real. The bigger one was down here, left head, right shoulder with the breakout, the test of that. And did it go the full way? We did. So pivot, bounce. Next pivot is 355. See if it hits that target. Weekly, what am I seeing? Actually, there's a morning star. So potential continuation pattern. Let's go to Solana. Solana with the consolidation. Now, very interesting to look at this. Let's just remember that Solana, where did we come from? January 2023 is $10. Right now, it's $92. So this coin went 1,000%. It did actually go 10x. And also remember this ascending triangle, which was confirming this pattern. Basically 170%, so 170% to 340% actually went exactly that. So this ascending triangle, in terms of the second target, is over. The ascending triangle pattern has been completed. How far do we rally from bottom to top? 618. Parabola as the measured move. You can see there's quite, sometimes I don't like to use parabolas. Let's use more accurate user trend line for real. And on the daily as well, trend line. This just lost that in its consolidation pattern right now. Can't really call it anything else. Maybe somebody could call it a cup and handle, but it's going to have to retrace deep, painfully deep, like to the top of back to the top of the ascending triangle deep, and then maybe we'll rally from that. But it makes sense if anybody's wondering for past like month, why is it selling off? Hit the 1,000% range. Once the crypto hits 10x 1,000%, it basically sells off, hits the 618, it's probably going to pull back to 786, which is $63. Is it overbought? It was. Yes. Now, for this to rally out of here, it has to break out above this resistance on the top side, kind of turning into almost a descending triangle. So if this is true, the measure move could be a 30% drop, which takes us straight to the 768, $70. Well, I'm just warning people, beware of Solana. Beware. If this coin does not hold EMA support, it can drop very quickly to any of these yellow, orange, or red EMAs, which could be a 20, 30, 40% drop on the price if we do not continue the rally. I'm still bullish. I'm still bullish long term, but the short term, if this thing fails, there could be a lot of pain on the market for Solana. Okay, Cardano. Let me change my chart. Let's go to Bitfinex. 88 Cardano. Similar type of mentality, all the way low to high. This is the pandemic low, October 2020. It's not the best chart for this, but let's go here more recently. We hit that 0.8888 retrace. Now, if we survived the descending triangle, we hit this daily triple bottom here. What was the measure move here? 73%. Did we hit that? Yes, exactly. It should have went 150%, which would long term take us to 86 cents. We'll probably hit the dollar if it gets to there. But this pullback that we're seeing, it's a normal pullback. After a very long period of sustained downtrend, it has to establish a higher low somewhere. It failed in 2023. This is the second chance we get to make that happen in 2024. Establish a higher low anywhere above 25 cents or 33 cents. The EMA of 40 cents right here, if it pulls back down, see if it can break up to the upside. But it has to cool off a little bit. We're not living in a crypto age where we can continue nonstop up forever. Hit that double top on the RSI, get an oscillator reset, get the price a little bit discount, get people excited about crypto again. That's what it's going to take. Maybe in April, when people get their taxes back, tax refund, maybe they're going to buy some here in combination with the halvening. That's why April's going to be a big month for crypto. We just have to hold the prices and nobody panic sell, capitulate now. There's no reason to. Just got to hold the price here, even if it floats around a little bit down here, and then we get one more like that. Let's see it on the charts, but it's going to take time. We need buyers. Come back in the market. All right, let's hurry up here, and I'll look at the Bitcoin ETFs at the end. What do I have left? So XRP, it's still in the lower low, although there's some bullish divergence building. This blue circle is still in play. 51 cents is the support level, and the resistance is 58 cents. AVAX with the pullback, still in the golden cross here. See if it's going to pull back to 28 or 23. DOT with a vicious looking head and shoulders. So in the short term, could drop down, if I measure this correctly, it could drop 30%. That's why in a bearish setup, if this golden cross is fake, if this entire rally was fake and we're not going up, then we could have a 30% drop in the market. Dogecoin, nice double bottom. Like I was saying last time, remember guys, remember everybody, 200 EMA bounce. What happens exactly 1 week later? 15% gain on that double bottom. Beautiful play. You got to watch out for those. Not everything looks bad, right? If I see a chart like DOT versus Doge, and I had to make a decision, am I going to buy Doge or DOT? I'm 100% going to buy Doge. Because this is a bullish double bottom setup that I was talking about 1 or 2 weeks ago. This is not. DOT is not. Shiba Inu as well. This unfortunately did not turn to an upside down head and shoulders. but it did manage to bounce off of the 890 range. So we successfully defended that once in 2024, defending the 100 EMA again. So as long as it stays above 900, we're okay. We're okay. Matic as well, a little bit at the risk here. We hit that double top low, lower high, lower low. So this 200 EMA is at risk. It needs to really hold there. We need some buyers to come back. Atom as well. Near is a little bit too high, so that parabola trend line here that I like to draw sometimes, that's already over, right? That's already over. See how deep the pullback's going to go. Litecoin is so dirty in terms of the chart. It should have, we went from a bullish to a bearish scenario on Litecoin. So not my favorite chart or my favorite coin right now, but holding above that support at the beginning of this year, it's turned into a large symmetrical triangle. So as long as we hold above 67, 65, we're okay. This happens before. So the price has to really blast off to the upside to get a committed golden cross on the charts. Uni with the potential drop to 575. Link hitting a quadruple resistance is not good. This is not good. Watch out for that, because the downside is $13. Percentage-wise, it's potentially negative 12% drop on Link. Bitcoin Cash just barely holding on to that trendline support right now, 240 area. We need to just see this. This is such choppiness, right? I need to see a real trend develop. Ethereum Classic pulling back as well, but everything's just tracking Bitcoin, crypto total right now. We had a bullish setup, nice rally, super FOMO rally, and then pull back down to 20 EMA support. So even if it pulls back down to 50 EMA, back down to $22, it's okay. It's okay. Long term, it's okay, right? Because even on algo, you can see we had the bullish setup in the circle, rally, so it's accumulation, markup, a little bit of distribution, and sell off right now. But we're still holding above a golden cross. So as long as we hold above all these golden crosses on these altcoins, 15 cents on this case on algo, it gives us the potential for a future setup of a higher high. Prices come down a little bit. People get excited. They got a little bit of discretionary cash to invest on the side. What are we going to buy? What's on discount? Buy, right? XLM as well, not the prettiest chart, but that resistance at 13 cents, we had the strong support at 11 cents. The next level of support down is 10 cents. So it's kind of going sideways. Not the most perfect, beautiful setup that I like to see, but there is a chance here. It's at a relative level of support. If it holds there, just like every other crypto, you can try to see a bounce to 13 cents. That's a potential of 15% gain on XLM with the 5%, 7% stop loss. VeChain as well, same EMA support play setup. You need to hold this area above 2,400, like 2 cents. A lot of those. So let's go to the Bitcoin ETFs and we'll sign off. Starting off with GBTC, you can see how high it is on the relative 1-year price chart. Let's go down to IBIT, right? So again, Bitcoin, these ETFs started off high price. So it makes sense. If you have experience with IPOs or ICOs, this is an all too familiar chart. All too familiar. Where it opens and massive sell-off. So if I'm long, I'm hands off. I'm not seeing a big pattern yet. What I want to see, this is a secret. On daily chart, you want to see the big basing pattern, sideways. This is still intraday downtrend. I don't like that as an investor. I need to see a big pattern. Let me see a double bottom. Let me see upside down head and shoulders. Let me see just consolidation rectangle like Robinhood, like Coinbase had this setup. Robinhood has this setup right now. So that's why on Bitcoin, I'm going to see more information than this. On the 4-hour and the 1-hour, however, we did hit that oversold potential bullish setup here, but I need to see a break above that. It is getting the oversold range. I might have to go into a 15-minute here. So at the moment, there is a double top, but it is uptrending right now just on the 5-minute, but I need to see a higher high and higher low to get out of there. We start to see some green. So we need to see a hammer candle on some of these intraday charts, which I'm not seeing yet. So that's why I'm not too excited. All of these look very similar. Even on the 4-hour chart, there's still this resistance right there. So until we break out above that on the ETFs, I'm not excited about that yet. No way. So I learned from experience. I don't just buy random IPOs or ICOs without seeing some good evidence on the chart. There's only a couple IPOs that really went well. Off the top of my head, I don't really remember all of them, but this is usually what happens. If you go to like Coinbase, you rewind. I remember the Coinbase IPO. Do you realize what happened here on Coinbase? Crash on the Coinbase IPO. Just like, doesn't this look like Bitcoin? Looks like that, right? So until it goes sideways, it doesn't always mean it's going to go up. You'll have a rally, and then it failed. Look how far Coinbase crashed. And then we had a massive pattern on a daily. But it takes like years for that to happen. So some technical analyst investors, the long-term chartists like myself, I'm not even interested yet. I have to look at Bitcoin to really get that chart price. But you need more information like this. Remember Uber as well, just for example. Uber crashed on its IPO for the first like year. And then it went pandemic, a super crash. It was like just miserable. And then we rallied from that, but then it crashed again because people took less taxis, right? And then you have a real setup finally at the bottom. So until I see something like that on any of these ETFs, looks like nothing as an investor. Even on the 15-minute, it's still in the downtrend, right? So I am not interested in that. No way. Bitcoin USD, however, is a different story, right? It's still relatively high. I changed the chart, but you can see we're at this top of the rally, right? So just imagine on this Bitcoin ETFs, this happened, and now all we're seeing is this little bit of red. So sometimes it pays off to just look at total market cap, TOTAL, and Bitcoin. That's all I need to really look at, unless you're hunting for altcoin setups every week. Okay, I don't see any questions right now, so I'm just going to call it right now. Okay, thank you everybody for watching. If you like this stream, if you learned something, you want to support this channel, the stream, go ahead and drop a like. Hit that like button, the follow button, the subscribe button. Cheer boost is always nice and appreciated. And chart requests or questions and comments always welcome on my YouTube comments. So let's have a nice trading week. Always remember, everybody, risk to reward ratio. You want a 2-to-1 risk to reward ratio with a good entry and strategy on the chart. Money management. Okay, everybody. Hope you have a nice week, and I'll see you in the next video. Thank you, and bye-bye.